moment, I'm going to be joined first by Crista Huff, Chief Analyst at Cabot Undervalued Stocks Advisor. And then afterward, we'll have Woody Vincent, veteran stock trader for the past 30-plus years, joining us here on the program. We'll get their thoughts on the markets. But first, justice, friends, superheroes have to look their best. Do you remember a superhero who wasn't well-groomed? I do. It was Chubby Thor. Odin's son was not representing, and nobody was scruffy man enough to point it out. Don't do that to your superhero dad. With great grooming comes great responsibility. After Dad leaves his fortress of solitude, the bathroom, he wants to come out of his dad cave having transformed from Shaggy Man to Scruffy Man. Scruffy Man is your source for Dad's grooming power. Groomers Assemble, the beard grooming kit for men. It's got everything you need for daily grooming. The state-of-the-art MK2 razor is made from the same aluminum as the UH-60 Black Hawk helicopter. You'll think Stark himself designed it for your Iron Man. Make sure your superhero dad is Scruffy Man. He'll look his best faster than a speeding razor, able to cut through jungles of hair in a single swipe. So log on to scruffyman.com today. You'll get free shipping on all orders over $49, and your gift will arrive quick as a flash in time for Father's Day. Use the promo code Jimmy and Shazam! You'll get an additional 20% off their Father's Day discounts. That's scruffyman.com and use the promo code Jimmy at checkout. All right, so pleased now to welcome back to Jimmy at the Crossroads, one of our two ever-patient guests, Crista Huff, Chief Analyst at Cabot Undervalued Stocks Advisor, rejoins us on the program. Crista, welcome to the show.
Hi, Jimmy. How you doing?
I'm doing well. Thank you so much for taking the time today. I appreciate it. I want to jump right in. It is fascinating to see what's happening in the economy with the stock market. We're down a bit today in terms of the market overall, but yesterday we hit record high for NASDAQ, and some things are looking better now economically and stock market-wise. What's your overall sense for things, Crista?
Well, the stock market had a tremendous rebound from what might have been the biggest crash of my lifetime. So it doesn't make sense that the stock market should rebound completely in less than 3 months. The market's really frothy, which means it's way overbought and it's due for another decent-sized pullback. So if anybody missed the current run-up because they pulled their money out and they were afraid, don't worry, you're going to get another chance to buy low.
So you think the market will decline once again?
It has to, because that's what it does. It goes up and down and it ratchets,
but
right?
Noticeably
Sometimes it ratchets sideways. Yeah. Oh, yeah. I have a ton of money on the sidelines waiting to buy low again, like I did last time. And that worked out really well, so I'm going to do it again.
Now, in terms of these economic numbers, look, we still have some tremendous economic strife going on. There are still nearly 40 million Americans out of work, but we did see some encouraging signs on Friday in the jobs report in terms of 2.5 million Americans getting jobs once again, becoming employed, as opposed to 8.3 million estimated, the forecast was, losing their jobs. So while that's not an indicator that the economy is suddenly roaring back, it at least may be a sign that maybe things have reached a sort of trough in terms of the job market and that things are finally starting to get back as we're reopening, which may be an encouraging sign. What do you make of it?
I expected more people to go back to work, so I don't know, on what basis the economists expected another 8 million people to lose jobs. Basically, all the people who were going to initially stop working because of the lockdowns, they were all figured into the numbers weeks and even months ago. So then the next phase is that some of them go back to work as things slowly reopen. And then in the next report, some more people will have gone back to work. The bigger problem is many of those people will not go back to work. Many of their businesses are permanently closed. Many others have seriously downsized. And so we're going to have a chronic unemployment problem in the US that's going to have a ripple effect throughout the entire economy. And that's the thing that I'm very worried about.
Yeah, well, certainly that this is not something that is going to come back the economy quickly, and it's just not part of the equation. But while you may have expected that many, maybe even more jobs to come back in terms of workers getting back into the employment space, there were clearly a lot of people, the economists, who were not expecting that. I mean, we were thinking more than 8 million jobs lost in the month of May. So if you have that kind of expectations gap, I take that as at least an encouraging sign, even if it's not some sort of an indicator that the economy is going to be roaring back very quickly.
Right. So I think that many folks will go back to work slowly. There are going to be income problems, not only from the folks who don't, recoup any jobs, but there are many industries where people will have fewer customers now. Like if they had been serving hotels, for example, and if hotels have been shut down and then occupancy grows very slowly, all the folks, let's say you're a cleaning business or you're a food service business or you supply furniture to hotels, all of these different businesses are going to have less revenue going forward for quite a while, and therefore they're going to have less income. So the owners are going to have to take pay cuts, they're going to have to lay people off. And that's what I talk about when I say there's a ripple effect from these lockdowns and from the chronic unemployment. So it's very sad, but you have to look at it realistically so that you can, because forewarned is forearmed. If you understand that businesses are going to suffer, then you look at your stock portfolio and you say, okay, well, I'm invested in this furniture company that just lost 40% of their business. So should I remain invested in that furniture company? So the more realistically you can look at the economy, the better you're going to do in your stock selection.
Once again, Crista Huff is our guest, chief analyst at Cabot Undervalued Stocks Advisor, joining us here on Jimmy at the Crossroads. Okay, so in terms of the stock market, I mean, yesterday the NASDAQ, which is very tech-heavy, hit record highs. We're also seeing the Dow and the S&P 500 doing better, noticeable improvements in that regard. Why do you think that is? Is it just people are looking at some of these data indicators and saying, hey, these are really positive, and so let's go higher and higher, or is there something else here?
There's a lot of enthusiasm. There's fear of missing out, which is a big piece of the bull market towards the end of any brief bullish run up. So you've got all the folks who just watched the market go up in April and May, and now they jump in because of fear of missing out. You've got economies opening back up, so that's encouraging bullishness. And there are a lot of people who think everything's just going to snap back to normal. And I don't know what planet they're living on, but those people are actually buying stocks as well. And then you've got oil prices rebounding because the business lockdowns are loosening up all over the world. Now, oil actually has a better chance of sustaining the recent price hike than the S&P does, because the S&P, it's just all, I think, a lot of wishful thinking on the parts of investors. But with oil, as businesses open up, they're using the oil. In China, they're back to over 90% of previous oil usage, and they bought like record amounts of oil in May. So some of this is very real, and some of it is very frothy. So I'm very bullish on the oil stocks, and I'm very cautious right now on U.S. stocks. Although I'm certainly invested in them, but I am. Let's just say every day I'm taking a little bit of more money off the table.
So in terms of the rising oil prices, is this something that is specifically because people are getting back to work? Is there more to it than that? What's been going on sort of in the oil market space, Crista?
All right, so you've got businesses reopening, and all the businesses are using energy products. And then you have the OPEC Plus nations on Saturday decided to extend the production cuts for another month. And as long as they're holding down production, that stabilizes or encourages prices. So people are reacting well to that, and the prices have been rising, and then therefore the energy stocks have been rising. And then in addition to that, Saudi Arabia each month sets their price on the price they're going to sell oil, and they were due to do that to raise that price possibly yesterday, and the market was anticipating that. And then China has had a surprisingly strong market on importing oil into China, so that's helping to support and push prices up. But the other thing, just for stock investors to know, is that the energy sector is the most volatile sector. I mean, you might think it's technology, but frankly, it's energy. And when oil prices went down in April, they fell like they crashed. They fell dramatically, right? Well, on the flip side, when oil prices go up, they move really fast as well. So now they've, doubled or tripled or whatnot since their lows in April. And there's currently no sign of that stopping. They're still pretty bullish. So, if you wrote it down, I'm really sorry about that. But if you're writing it up now, congratulations.
Okay, so Crista Huff, when we look at the stock market and sort of the dynamics that are at play now, what do you think people need to keep in mind strategically in terms of opportunities that may present themselves in the coming weeks and even in the coming days, and also from the perspective of things they might want to hold off on doing? If you think that the market's going to be declining again, then there may be certain steps that they might not want to take in terms of getting in on the action now. They may want to stay on the sidelines with some of their cash a little bit longer, it would seem.
Right. If somebody has a bunch of cash on the sidelines and they're not wildly experienced at trading, I would just keep the cash on the sidelines and wait a couple of weeks. It is almost guaranteed that the stock market is going to have a decent pullback. That would be like the S&P 500 falling, 2 or 3 or 400 points. You'll know it when it's happening. And if you're a little more experienced, there are places that you can invest right now. Energy stocks, their technology stocks are still doing really well. What you want to avoid for the rest of the year, it would be industries that have been greatly harmed from the lockdown, like theater and entertainment, restaurants, airlines, anywhere where people gather in groups. Yes, business is opening up again, but there are a hell of a lot of people who are afraid to gather in groups again. They're afraid to go to church. They're afraid to go out to eat. And so you're going to have a much slower rebound on any of those industries than you will on, let's say, people who buy Adobe's services or Apple's services. So be really careful with any industry that has to do with people gathering.
And so with some of these positive headlines, negative headlines, things that come about, you and I have talked many times before, Crista, about how people should approach the headlines as far as making decisions and whatnot. How should they interpret these headlines and examine them before making a decision?
Headlines, first of all, they're written to scare you. They're written to catch your attention so that you read the article. And if they make it a happy headline, you're less likely to pay attention than if they make it a scary headline. So almost anytime you're reading an investment article, you're likely to see a headline that's way scarier than the actual facts. And that's very true during earnings season. There could be 9 great numbers and 1 poor number in an earnings report, and they will always put the poor number into the headline. I'm not sure what else to tell you, Jimmy, other than maybe people should just turn off the TV. I've noticed that the people who were the most scared, for example, during the coronavirus were the people who watch TV all the time. And I have a lot of friends, including myself, who don't watch TV ever, and none of us were scared at all. And I don't even own a mask. So turning off the TV might be a good idea.
Okay. So a final question for you, Crista Huff, and I appreciate your time today. Again, Chief Analyst at Cabot Undervalued Stocks Advisor. Actually, two final questions. The first one is, if there are any particular stocks that have been catching your attention right now that might provide some opportunities. And as I say, always when we talk about stocks, is when we talk with an expert like Crista or coming up, Woody Vincent, is that these are starting points for investigation. Talk to your financial advisor, so on and so forth. But with that sort of disclaimer out there, Crista, what are a couple of companies that may present opportunities that you're noticing right now?
Okay, whether you're a trader or a buy and hold investor, the price charts right now on Procter & Gamble and Bristol Myers are very bullish. So I think I bought more Bristol Myers today. Those look good. Lot of technology stocks are fantastic long-term companies. You might want to wait for the market correction and then go after Apple, Netflix, Amazon, Adobe, Nvidia. These are companies that are leaders in their field, and people, I think, are going to make money, a lot of money in them over the next few years.
And now the final question, Crista Huff. I know recently you had the exciting opportunity to become a hedge fund manager, one of those evil hedge fund managers. Tell me a little bit about what's going on there. What's your new venture?
Okay, I launched a hedge fund, and it took quite a few months of all the background startup stuff with lawyers and administrators and accountants and auditors. I mean, it's crazy the amount of people I had to hire. And then the fund launched on February 10th, and it's an equity fund that can take advantage of both up and down markets, because I can bet against stocks just as easily as I can bet for them. But it's not doing anything weird like foreign stocks or commodities or currencies or whatnot. It's just an equity fund. And the principal is up over 20% so far since February 10th. And I'm greatly enjoying it, and I'll go more public with it in the future.
All right. Well, best of luck to you. By the way, is there a place people can go to get more information about your venture or about hedge funds in general?
If they want to know about my new fund, it's best to send me a private message on any of the social medias, LinkedIn, Facebook, Twitter, but make sure it's a private message, not a public message. I appreciate that. Thank you.
At Crista Huff on Twitter. We can throw up Crista and her lower third real quick so you can see it one more time, what she's got there. Nathan Matoush, if you could please. There you go. That's the Twitter right there. Crista Huff, Chief Analyst at Cabot Undervalued Stocks Advisor. Thanks so much as always.
Yeah. Thank you, Jimmy. Have a great day.
You as well. Once again, Crista Huff, Chief Analyst, Cabot Undervalued Stocks Advisor, joining us, giving her insights on the markets. Sounding, there was a long period of time where she was a very bullish person, and now a little bit more of the bearish side coming out as we see the market dynamics provide additional challenges. We're not out of the heady waters yet, that's for sure. I am so pleased to welcome now our next stock market guru. He has for decades been a veteran stock trader. He, like me, is the former host of a radio program called Business for Breakfast, although our Business for Breakfast programs were a little different from each other in terms of how we approach things, but that's the fun thing about radio. And then also, he's the author of the book, What's in a Name, which you can get on Amazon. Woody Vincent rejoins us here on Jimmy at the Crossroads. Woody, sir, welcome to the show.
Thanks very much, Jimmy. Well, I should have some stage makeup on. You look good. I look like I just stepped out of the graveyard.
I don't have any makeup on. It's the lighting. The lighting does all the difference here. That's what's going on.
I'll have to do the same.
I've got the cool backdrop as well. So
yeah.
All right. So, Woody, did you listen to some of what Crista had to say?
I did. It was kind of spotty. I don't know if it was at my end or your end, but it was a little spotty. And I agreed with everything she said. I was going to tell you, you could basically just put my face up and run her segment again.
So you're pretty bearish too, then.
I am. The stock market has a way of taking back what it gives you, and if from the bottom, even if you had just ridden it all the way down to the bottom, you probably made pretty good money. You're probably pretty close to even. I know my retirement accounts, I'm actually at a record high. So what does that tell me? And my trading accounts, I'm basically about flat. Well, whenever the market gives you a second chance like that, take it. So that's my opinion.
Well, I think your retirement accounts maybe were a little better prepared for the bear market than the trading accounts were. What might you attribute that to? Have you done an assessment to sort of look at how the one was able to weather the storm a little bit more than the other? Not to get too personal here, but
well, actually, I just look at them as different pools of money, and I was in the right stocks on the retirement account, and I was in the the wrong stocks on the trading account. I mean, I kind of treat them the same. I don't really trade that much. I trade, you get 3 or 4 opportunities in the course of the year to really put money to work and then get it back off the table 90 days later. That's kind of the nature of it. You have a couple of big pullbacks. And I actually, I had a couple of stocks that were just pure lemons that I owned. One was a Chinese kind of Amazon.com stock. And it was just, I just didn't think it could keep going down. That was just dumb on my part, but so I lost money there. If it hadn't been for that one big catastrophe, I'd actually be in fine shape there. But every now and then, one stock will kill you, and I was too dumb to not to sell it.
Sure. Well, Woody Vincent, so in terms of the economy right now, I'm of the mold that we're seeing improvements finally, that things are reopening. That's a good sign that we had 2.5 million jobs created last month, according to the Labor Department, versus 8.3 million jobs or so that were anticipated to be lost. However, at the same time, that doesn't mean that the economy is roaring back, that it, as President Trump put it, is rising already like a rocket ship. There are still some muddy and difficult waters ahead. But I think it's an encouraging sign that reopening was the key to get things at least starting to be in a positive direction, as opposed to some of the naysayers to the point where we're saying reopening is not going to do just about anything to actually get the economy rolling again, hence the expectations for nearly 10 million jobs lost versus nearly 3 million jobs gained, even though, again, caveat, the job gains are not necessarily the best jobs, the most exciting jobs, but still people are getting back to work nonetheless. What's your sense for where the economy is at, Woody?
Well, the good news is the Titanic can only go down to the bottom of the ocean. It can't get any lower than that.
Okay. Yes.
Yeah, I'm glad that we got the 2.5 million. That was better. And as usual, the government predictors were wrong. But 2.5 million down, 38 million to go. Then we're back in business. I think that we're really going to have a long struggle. I think that's why, and I'm pretty sure this is what Crista was saying. The market has really overdone itself. The market is anticipating a bigger rebound than it's going to get. So you have a V-shaped recovery in the market. You're not going to get a V-shaped recovery in the economy. You're going to get an L-shape at best, and then the market will probably come back down and reflect that. That's my guess.
Yeah, Mohammed El-Arian on Sunday, Fox News Sunday, he was saying he expects sort of a check mark for the recovery as opposed to a V-shaped recovery, which is a little bit like an L shape. It's an L-shaped on a slant.
Well, good for him.
So,
I agree. We're just not going to, it's going to plateau, and it's going to plateau well below where it was. You just can't light a wet log. And that's one of the problems you have. And even though a lot of the jobs that were lost are service sector economy, small restaurants, and this kind of thing, it's going to be very, there's a lot of ripple effect on even those businesses. All the people that sell tablecloths or clean uniforms or, new dish replacements and all this kind of stuff, or whatever they sell at restaurants. Those people, those suppliers are going to have a lot of trouble. And you're going to see that ripple effect all the way through the economy, not just in restaurants, but in small little shops here and there. When they close down, their people don't have anything to buy, and where they were getting their paper towels or whatever they were getting, they're just going to have problem. And that is going to be a lingering problem for the market for quite a while.
However, one of the things that, and I made this contention yesterday in my opening monologue here on Jimmy at the Crossroads, Woody Vincent, my view is that the number one thing we need to see from government is to get out of the way, that this job market increase or improvement of 2.5 million instead of 8.5 million lost, is because more than anything, the government started getting out of the way and allowing businesses to reopen. And I think that's the number one thing, as opposed to government taking all sorts of grandiose actions and putting in this policy and that policy, is we need the government to finally start letting businesses get back to action. And clearly, there isn't as much concern about the coronavirus anymore if you're judging from how people are handling some of these protests and the media's covering it and the reactions, even the scientists and what have you. I mean, I'm over that. I'm ready for the reopening to just, it's going to take time. Of course, it's not going to be a quick process, but I'm ready for the government to just get the heck out of the way.
Well, I agree with you 100%. You know, one way to get rid of the virus in your shop is to burn it down. So, way to go. Yeah, you know, first of all, this whole Corona thing, they have gotten this so wrong. And now the World Health Organization is saying you probably can't even get it from somebody who is asymptomatic.
Although actually they're saying that they're correcting themselves and saying the data is mixed. We're not sure about that. I mean, but you can't believe the World Health Organization anyway.
No, that's my point. I mean, first of all, this was going to be 1918 all over again. Nobody seemed to bother to realize that in 1918, nobody had any penicillin and people actually died of pneumonia for the most part. Mm-hmm. So a lot of those things, you know, they've taken HCQ, hydroxychloroquine, off the market because President Trump suggested. I mean, you know, it's just brainless if you ask me. But nonetheless, now a lot of people are still scared. And what business, you know, this is the problem that you get into. This is what Keynes talked about, is reigniting the animal spirits. What business is actually going to hire new people on a hope and a wish? That's just not going to happen. They have to actually see more people coming into their business and clearing out the shelves. Until you see demand back in the economy, what business is actually going to hire? You have that problem. Then you have some businesses where, you know, the being on welfare, being on the government assistance actually pays more than the job they left. So I think it's a mess. But I would agree with you, yes, that the government has to get out of the way, and they should start letting people. Here's how you can get people to go back into stores, or to encourage the stores. Give businesses, small businesses or large businesses, give them some kind of legal immunity. If you get the cold or get the virus at your company, you can't sue me, and then I can open my doors.
Yeah.
And put a sign on the door, say, you know, enter at your own risk. A lot of people, I've been to 2 or 3 restaurants since they kind of reopened here in Colorado. And I enjoy it. I was dying. I thought if I had to eat one more home-cooked meal, I might just kill myself.
Well, okay, let me jump in because you said a lot there, and there's a lot I want to get into from what you pointed out, Woody Vincent, again, veteran stock trader, our guest here on the show. So first of all, when it comes to the idea of demand, I mean, look, the number one reason why businesses haven't hired employees, I don't think it's because there's a lack of demand. There's been a lack of demand. I think it's because those businesses were told you had to shut your doors. And if the businesses can start coming back, even slowly, then that will give an opportunity for consumers to get out there. And yes, they can start spending, but also businesses, especially if you get investment going more, businesses will then be able to hire so people have money in their pockets so then they can go start spending. It all comes back, and Mark Cuban and I had this debate, it all comes back first to investment even more than to the demand side of the equation. So that's one point that I would make, is that we need to allow businesses to reopen and do it in a way that that encourages investment in those enterprises. But also, to your point about immunity, and we talked about this in terms of the liability protection. That's what you're getting at. We talked about that last week with Alfredo Ortiz from Job Creators Network. I think that's critical. Now, that doesn't mean for everything and every reason, but by and large, providing some kind of liability protection for these companies, particularly on a state-by-state basis, because it's more of a state thing than a federal type of program, is very smart and necessary in order to help businesses feel confident that they can go back, and then their customers can start coming back feeling more comfortable over time. I feel more comfortable the more places I go back to. Anyway, what do you say?
I do too. You know, I mean, I've been out and about this whole thing. I'm like the customer of the year at Home Depot because I'm finishing my basement, and I'm there all the time. And I don't seem to be getting sick, and I'm in the at-risk group. I'm 70, and I'm not all that worried about it. You need to get people out and about mingling, and to develop herd immunity. That is what the human body is a real miracle of nature, and herd immunity is one of the things that will take care of a lot of this problem. And young people should get out and mingle with each other. They'll develop the herd immunity, and then they can.
I think we're there.
They can visit grandma and grandpa.
I think we're pretty much at herd immunity now, Woody, which might be why we are now seeing so many fewer cases showing up of coronavirus, and especially deaths. I mean, we have really been seeing the number precipitously down on a weekly basis, which is very encouraging. And that's happening even despite all the protests and whatnot that we've been having that should theoretically be spreading the virus more, especially by asymptomatic carriers.
Yeah, I hate to be cynical, but they pay the hospitals more if they label it as coronavirus, and I was wondering if they were to change that and pay them less as coronavirus, if we'd find out that a heck of a lot of people are actually dying from other things. I don't trust the numbers. I just don't. So.
Well, there is a lot of reason to show distrust, especially when the CDC, Centers for Disease Control, has been requiring that you send more than just COVID deaths due to COVID, but also deaths from people who had COVID-19. But Woody Vincent, let's go to the whole notion of bringing back the economy and what the stock market's doing. When we have seen the market rise over the last several days, although today we're seeing a decline in the S&P 500 and in the Dow Jones Industrial Average, with the NASDAQ slightly up, and it hit a record high yesterday. What are you thinking is going on in the stock market right now from your decades of experience, Woody Vincent?
Well, I think, honestly, a lot of it is dumb speculation on the part of the public. They think that the coast is clear. And I think then another large part of it is short covering for people who really thought this thing was just...
What does that mean, short covering? What does that mean?
People who have borrowed stock and have to return it. And as the market rallies, they're going to have to return it at a higher price than they paid for it. And people can really get panicked into buying a stock. Let me give you just one example. Chesapeake Energy. And, now you've seen oil go from negative $37 to $37 positive on West Texas Intermediate. So now oil's never been that volatile. It's always volatile. They don't call it the Widowmaker for nothing, but it's just insane. So at any rate, yesterday somebody paid almost $70 a share for Chesapeake. This was this was a much shorted stock. It was hard to borrow, and that was a classic short squeeze. It's down today. It was down about $40. So somebody bought it at 70 yesterday, and if they held on to it, they're stuck with it at $30. They're getting killed. It just tells you that you really shouldn't chase stocks, and you shouldn't chase the market. As Crista said, markets go up and down. It's been my experience over the many years that when the market gives you a chance to get out. It's going to give you a second bite of the apple. I guarantee that. And, I'm looking at, let's take a look at the Dow. The Dow is at about, let me just see here, 27.4. I can't read with that. Hang on.
Somewhere around
Jimmy,
27. Yeah, that's fine.
You're going to have to give a little, 27.4. Okay. It's got natural support, a lot of base support at about 24,000. So that's 3,000 points that the Dow could drop. That's about 10%, a little more than 10%. That would not be a nightmare. The NASDAQ's at an all-time high, and a lot of the NASDAQ is, little energy drillers. And I think that I don't think that we're out of the woods by any means in what's happening to oil. Even at $37, the frackers can't really still make money. They got to head a lot closer to 40. So
Sure.
They probably won't go into default. That saves the banks that have lent them money. And there's all sorts of a lot of positive at $37, but I don't think we're out of the woods. I think that you can see oil go back to 20 again.
So I'll get back to oil in just a moment, but I want to clarify a couple of terms just for some viewers and listeners who may be unfamiliar with some of the stock terminology. When you say short a stock and chasing a stock, what do those terms mean?
Well, shorting a stock, I didn't hear the second word.
Chasing a stock, to chase a stock.
Chasing a stock?
Yeah.
Well, shorting a stock, when you sell a stock short, that is the sale of borrowed stock. You borrow stock from somebody. Let's say that it's XYZ Corporation, and you borrow it and you immediately sell it. So let's say you borrow it at $50 a share. You are not obligated to give any, you're obligated to return that stock. So it's bizarre that it's actually even legal, but it's very legal. You're obligated to return the stock. So if you sell it at 50 and then you can, it goes down to 40, you can buy it back. That's called covering. And you get to pocket the $10. Now, if it goes up to 60, you're losing $10. It's kind of like, and what's amazing about it, I always think kind of from an ethical standpoint, is it's like if you borrow your neighbor's car and then trash it, all you have to do is give it back to them, and you can give it back to them after you've trashed it. So that's what selling short is
Okay.
the sale of borrowed stock is what it technically is. And the fact of the matter is, it's just the regular buy low, sell high in reverse. You're selling high and then buying low. That's all it really is.
And chasing stock. What do you mean?
Chasing stock is a stock that's gone up too far, too fast. You've got to realize that when a stock goes up too far, too fast, it's got a lot of profit in it for somebody. And if you're the last guy in, you're going to get killed. So you don't need to chase them. They always come back down to earth. If you just buy stocks that when they come back to their trend line, and a trend line is where you just draw a line on the lows of the stock, stock goes, let me get my hand up here, goes up and then comes down and goes up and comes down, comes down. If you connect all those low points, that's your trend line. So buy it at the trend line. And then if it breaks below that trend line, you're not going to lose much. But if you buy it at the top of that trend line, you're going to wish you hadn't.
Learning some basic stock terminology today here on Jimmy at the Crossroads. Just a couple minutes left with you, Woody Vincent. Let's go back to energy. I mean, obviously, this was a very difficult and precarious industry for the past few months, particularly because people were not driving, people were not flying. Now it's slowly coming back in that regard.
Yes.
What do you think is sort of the lay of the land? How do you expect energy to proceed?
I think that energy is vulnerable to a good-sized pullback because, the Russians and the Saudis would like to put our fracking business out of business. They would like to do that. It's a little bit like playing chicken. How long they can hold off and not make money for themselves, that's one thing. The Saudis can pump oil for almost nothing. The U.S. frackers need about $40. They're close to that now, but here again, I think that they're seeing as good as it gets for a while. You never know. Maybe everybody just go tank up this afternoon and start driving like crazy, driving around in circles. But I don't think that's going to happen. And so I'd be very, very leery about oil. I looked at all the oil companies, and they've had just a tremendous run. I mean, I had a nice run in Transoceanic, RIG is the ticker, and I sold it. I sold it too soon, but what the heck, And now I think a lot of those stocks are going to come back to earth. I think it's still very dangerous ground to be investing in those stocks right now.
Woody Vincent, final question for you. You've mentioned a few different companies. Where are you seeing opportunities in terms of industries, so economic sectors, and maybe individual stocks, just two or three?
I'll tell you, the only things that I really like are stocks that I own. I can tell you this: I have a little stock called Soliton, Soliton. They put a pulse into your onto your skin, and they can remove tattoos with it, and they think that they may be able to remove cellulite. If the cellulite takes off, that's going to be a big winner for them. Nobody likes cellulite. I think some people are addicted to tattoos. I don't know about that. And then another company, let's see what I actually do like. I don't have that much stuff that I really like, Jimmy, but another one called PULM, which is, let me get the Pulmatrix. They deal with respiratory diseases. Stock has been rallying nicely, and I think it's got a nice uptrend. PULM is the ticker. It's a penny stock. It's $1.60, so you can buy a little and take a chance with some mad money.
How about a sector? Any sector that you think might hold some potential in the coming months?
I haven't even thought it through that far because I mostly trade individual stocks. I don't like really anything. I mean, I don't really like anything now because if you've got a stock that hasn't rallied, then don't buy it now. It's no good. That's why it hadn't rallied. And everything else has rallied. So I would say cash is the position that I like.
So people probably missed out. If you've seen a stock that's rallied, you missed out on that opportunity, at least in the immediate sphere. It's probably, it seems you and Crista Huff are both arguing probably that a lot of these stocks are going to go down again, so there should be another opportunity coming up in the near term.
Yeah, keep your powder dry and have some money ready when you see another pullback.
So that's encouraging, but I have to say that usually I could at least go to Crista Huff and get sort of a more bullish attitude, especially during trade when I was saying, oh, the market this and that. Now both of you have gone sort of bearish on me. I don't just need to look to good friend Mark D. Cook to be the bear. Everybody's bearish right now, it seems. Not everybody, but a lot of people do. That's true. Yeah, it might be hard to get him these days. These days it might be hard to get Larry Kudlow on the program. There are a few bulls out there. All right, Woody Vincent, everybody, thank you so much for joining us. I appreciate your time as always, my friend.
Thank you. You're welcome.
Thank you. Once again, Woody Vincent, veteran stock trader for past 30 years or so, joining us here on Jimmy at the Crossroads. Thanks for watching this clip from Jimmy at the Crossroads. You do not want to miss a minute of engaging, intelligent talk. Subscribe today to the Jimmy at the Crossroads YouTube channel, and you'll be sure to catch our live broadcast. I appreciate your support.
I got Jimmy at the crossroads, making sense out of no sense. Yeah.